welcome back to F.A.C.E Samantha. How are you?
Hey, good morning, Dale. How are you?
Good morning. Gosh, we haven't talked since we were in the middle of the market meltdown or had completed it. And who would have thought when we talked a few months ago, the NASDAQ would be pressing all-time highs. So if you want to go ahead and share your screen, Samantha, you just hit that drop-down menu, share screen, and we could see what's on your radar. See the green box.
Yep.
There we go.
We good?
Yep, there you are.
All
See
right,
your
good
Twitter
morning.
page there?
Huh?
I see your Twitter
I
page.
just have my Twitter up, happens to be.
Okay.
Yeah, no, we actually talked right in the middle of this craziness. I was a little heated and passionate that I had kind of come to the realization that we weren't just dropping a normal kind of 20% correction, but that we were in the midst of a crisis.
Yes.
So I went back and I looked at that video and I'm like, wow, you were kind of like intense there, girl. But I was very, that was my mood, is that we were actually in a crisis. But you know, $8.5 trillion later by Fed, Treasury, and Congress, we have some stabilization, obviously. But today, I actually want to talk to you about this lovely rotation into value theme that's been basically intense and heated this week. A little unsuspected. Yeah. Guessing you probably weren't thinking I wanted to get on that track, but I was hoping that we could talk about that.
Oh, sure. Yeah, you mean like Russell, like, all the unloved sectors starting to outperform the formerly loved sectors.
Yeah, back on Tuesday morning, I was really into this theme that the rotation from momentum to value was an outlier event. It was underway, basically. It was an outlier event. It needed to revert. Whether it was the perceived kind of economic recovery of, states going back into some sort of normalcy, or it was a time for just significant correction in valuations. But I don't know if you've noticed, but value has greatly outperformed momentum the past few days. It is rocking and rolling. And I mean financials, industrials, airlines, the leisure companies. And there are different, ways to basically kind of measure small caps, if you will, and value plays. And sometimes they are the left for dead, features. But
right.
we also know lots of them. GM, I mean, just screaming higher the past few weeks, which was a really great breakout of some of these triangles and wedges. But then Macy's, since Monday, Monday was a holiday, Tuesday and Wednesday, industrials, transports. I mean, transports has just been on fire. I mean, hot fire flames. So that's what I mean by the value rotation. Obviously, banks are screaming higher as well. So yes, this small cap move is something that I wanted to kind of talk about because I think it's got a little bit more legs.
Okay. All right. So, yeah, I think someone showed a chart, Samantha. I'm not sure if you saw it, but before this happened this week, they were showing growth versus value. So
Yep.
Is growth and momentum synonymous to you?
Correct. So MTUM is just, for example, one way to track the growth. Okay. And when I, wrote that, basically that tweet in response to someone, it is literally the MTUM is one way to look at it. Yesterday, it was a nice intraday bounce because it was on lots of levels of support, but it's represented in the FANG stocks, right? So you have, look at, beautiful all-time highs, but it's poked, if you will, its head down below the 8-day moving average. And IGV, which is the software index, same idea. This is heavily weighted in Microsoft, but it's already tagged this trend line a few times. That's the 21, by the way, this little dotted white line. It's intonating to me some pressure, especially if we get a down move today and tomorrow. We will have a very bearish engulfing on a weekly. But you can do this for pretty much all of them. IPO, same thing. We've been, moving higher. We came back down a little bit yesterday, almost tagged the 21. I think that's a magnet. You can look at FDN. It's another growth other than your usual, right? The NASDAQ.
Mm-hmm.
I'm just looking at particular growth.
I'm trying to remember from that chart when the last time growth over value was that extended. Was it 2008 or 2000?
Oh, no.
It was near historical highs, growth versus value.
Goodness, we've had it a few times actually. We had an outlier event right before the repo madness in September of 2008. So it really depends on like standard deviation move when it's just extreme, like you said. The bid in momentum has been unrelenting. Passive investing, the safety plays of the FANG, and then of course it's the new economy, the cloud-based,
Right.
if you will. But this is still right now a rotation that I like and have, written about to clients and done a little bit of tweeting the past few days. But this to me is got some legs. Now some, and of course we're talking also the cruise lines, and are they going to actually survive or not? The luxury or the leisure brands, airlines, banks, small caps, all of that has been rocking and rolling. Some of them have some really good setups, like the Boeing last week that I was really intent that this would actually pop up, at least for a trade, and it's been working really well. But it has a lot to do also with yields. Are we going to get this type of, you saw the Boeing, that's a weekly chart, the Boeing kind of pop up, and that's a 10-week for those who are interested. Are we going to get any move higher in yields? We will see, but right now it looks to me like they're intonating higher, and TLT a little bit of a pull down, unless obviously we get a big market swoosh here. But I'm liking a lot of this value rotation, and it's been very profitable for oversold transports, financials, and small caps of all types of sectors.
So do you think that it's just a move of money moving into undervalued things, just a rotational move, or when you talk about things like cruise lines, that there's going to be a good outcome and not a second wave, and the worst of the coronavirus is behind us and the economy is going to have a chance to heal and recover here?
Yeah, I think there's a lot of perceived economic recovery. And, the market is obviously forward-looking and speculative. I also think there's some great value in these discounted prices. Now, we had lots of headline risk I wrote about for clients on Tuesday regarding, China. It's a big deal across the board. Also the dollar yuan, which you were just talking about at the very end of the prior interview. This is obviously intonating higher. It's a danger if it does. It bids the dollar higher as a safety trade, and it obviously would impact large cap more than small cap perceivably. So this to me is definitely the risk, but it's also the fuel for that rotation. Right now, I think the market rally was pretty clear on Tuesday that we had some short covering. I mean, take a look at non-commercial net futures, all really low for the past 2 years. We have definitely retail home and buying, right? So the Robin Hooders of the world. Yeah. There's some quant justification as well as it relates to, gamma strategies and buying begets buying, basically. So I think there are some good reasons under the surface for market structure to be rallying this week, and in particular, why it's rotated from tech into value plays. But this is the Robin Hood, by the way. I mean, just intense hockey stick there for, participation, because they're either working from home and have some extra time, or some extra, need to make money because they don't have a job. So that particular anomaly, if you will, of this rush, if you will, into new accounts is a big deal. But I think this violent rotation, and it's what I call that rotation from growth momentum into value plays, is also going to be a little bit of inflation, expectation, a little bit of a yield pop. if we do get some risk on here with China, then I think there is going to be resetting of some of these overpriced FANG stocks. But no question, I mean, there was just a giant, oh yeah, retail too. And even the news, which is funny, right? The short covering of these value plays is really what's also driving this. I should have said that first. There's a lot of short covering that's happening from hedge funds that have been beating down, the trips and the Carnival Cruise Lines of the world. Of course, airlines. But this was just the percentage change on Tuesday from the open. That continued on Wednesday. Today, we still have pre-market so far elevated prices, retail, the transports. So I think that these are just due for reversion, and they're working.
Okay. So what do you do? Say, for example, you're flat the market right now. What tactically would you be doing? Waiting to buy dips in value and sell rallies in growth?
So depends on the time frame. I have already been buying since Tuesday, tons of these oversold plays: FDX, Trip, American Airlines, Boeing, Gilead, Macy's. I mean, this is not a lack of. I got a few dozen positions in options open. Okay. It's stupid because they're just all percolating at once. So they're very, very ripe for chasing and swing trading potentially. But this is what I'm looking at, big picture. I just put that out last night for clients, which is basically we've got this continuation. Retail also picked up a lot yesterday, but market neutral, this is momentum, this is value. There's a little bit of reversion going on. I think it's got some legs. And then when we have the stay-at-home versus back-to-business, metrics of here are the growth plays that have been doing great, right? The cloud, the IPO. And then we had just box office drop off the face of the planet for all good reasons. REITs, outlet malls, airlines, restaurants. This is an overreaction. So the market, I think, is now getting a little bit of a grip, right, on their fear over COVID and on those dumps, if you will, in these plays, and they're going back in. So for right now, I think that is the thing to watch. I like it a lot. Now, there are going to be also those who say, wait a minute, small caps are right now wicked expensive. And yes, the norm has been to buy the FANG. I'm not saying that is done, but it's a process. And even, yesterday I mentioned to clients, where is it? Okay, careful, a mad dash for trash is usually a good sign that we are at the tail end of a risk-on, bull-on, bull run in equity.
I was thinking that you don't think that's true?
I do.
Okay.
But I think it can last a while. I mean, take a look at this. This was a while.
Yeah, that was years.
This was a while, even though it was more dramatic. Yeah. Why is this going to be, repealed right away? I think we have some also big fish, whales coming in, taking activist positions in some of these oversold plays, like a Carnival. So I personally think this has got more legs. I don't think this is going to be a 1 week and done value rotation. And of course, I'm waiting to see what's going to happen with China retaliation, based on the Huawei blowback potential of the extradition, news that's going on right now in Canada. And the dollar is then muted, just totally in this incredible wedge. But I happen to be a dollar bull, so I think we're going to have some surprise here in the dollar yuan. And then that's going to add a bid, if you will, to the dollar. And that's going to also help reprice stuff. The other part of this is I am just fascinated by this particular chart. I don't know if you can see this really well.
I saw you tweet that. How long could it go on?
My gosh, right? This is unprecedented. This is the 2 and 10 year yield curve, right?
Right.
And this has got to come in. This is just not normal, natural. I know the Fed will keep buying treasuries, which is bonds. I know they're going to be bid no matter what, even if they come down $5 TLT. We know Fed is going to come back and buy them. But honestly, that's just a freak of nature. This is a rate of change in this bull steepener. I'm sorry, just for those who don't know, this is, we had this bull steepener that is bearish the market. That's when our market basically started to roll over and hard. It's also a sign of recession, although the red line is not in there yet because it's not been officially called. But nonetheless, that is a parabola that in normal, market terms is unsustainable. So that leads me to believe, I got it in there twice. That leads me to believe we could probably have a violent kind of pullback in TLT, at least into the mean. This is the channel.
150-ish.
Yeah, exactly. And that means we got to yield a pop in the yields. I don't know when, but I'm waiting for it.
Okay.
And this
there's some debate that there might be like one more if we got any kind of pullback in stocks that TLT 10-year notes could make a move back down towards the lows. I think the lows are in yields, but maybe a retest. So we'll see. But I agree with you. Isn't that the most crowded trade on the planet?
That too.
Long treasuries.
But look at this incredible move, obviously, in yields. And that's just talking, there's real yields too, that, with inflation versus what the forward futures market is pricing in for negative. I'm not there. I think we just get a yield pop. And then, of course, the Fed comes back and then, hammers it down. But this is getting way, way too, from a technical standpoint.
Very quiet, yeah.
Way quiet and way coiled. So
a lot of compression.
A lot of compression above, the 3, the 8, the 21 day. It has a great chart set up on a weekly for a pop. I guess it wouldn't be perfect, but if you look over here on the weekly, this lovely scoop, here's the 10-week, looked a little bit like this Boeing, which is kind of moving higher too into the 10-week. So I'm not talking about a ginormous yield move, but I do think that that's going to re-enter volatility.
Back to 120, 140 on the 10-year?
I don't know if it's going to go that high right away. I think, can we just get to 0.8?
All right, yeah, I know.
let's just
you don't know how many times I've been a boy crying wolf. Okay, the 10 years turning. We're breaking out, and then we don't. We're breaking out, then we don't. So
exactly.
I know we're close because I've had positions in TBT for about 2 months, and not that I've taken price hits, but just it tests. You know what these markets try to do to you, Amanda? Excuse me, Samantha, is wear you out.
Yeah, shake
and then
you out.
The minute you say, you know what? I'm just tired of it. Then it goes. But they try and wear you out first, don't they?
They really do. And honestly, that's their job.
That's their purpose. What a mean guy.
And I am short TLT, so you and I are kind of in the same boat. But I'm very very intrigued by this chart as well, which is the small cap, and this is again that value play. For a long time, as you can see, this election, if you will, we gapped up. And we had a little bit of a gap. This, by the way, is SML, so it's the top 600 in the small cap. I like to chart all kinds of things. I'm looking for something. And this one just gave me basically a gap that we needed to fill. So we did finally, in that March 35% downdraft. And we have not made up much distance, have we? We know that. Which is why I'm still of the camp that we're going to have a rollover in the market and, not do this V shape in SPX. We have in the Qs, but I'm talking about this small cap move, bullish above, bearish below is just, for me, very clear. And relatively speaking, in other words, small caps to the SPX, we took out the 2008 lows. Talk about oversold, wicked, extremely oversold. So to me, this is still good fishing,
Okay.
until it isn't. And some of these charts also relational study work that I
Yeah.
do, which is relative strength when I put like the transports against SPY.
Right.
This took out, you can't see it because I don't have it far enough back, 2004 lows. So this waterfall then bounced this week. This is intense, right? This is the airlines, this is the railroads, this is truck transport, FDX, et cetera. This took out 2004 lows, took out 2016, oil industrial recession time, took out 2009.
Yeah.
That's what I meant by an outlier, ready to revert in some of these oversold sectors. And that would also include retail. This retail study down here, XRT to SPX, left for dead malls and such.
Right.
Check this out. Relatively speaking, that was definitely where we fell off the cliff.
Yeah.
And we are back above this, I would call it kind of, I don't want to.
Looks like the LQD.
I haven't
like
done that one
here. The corporate bond chart.
No, I know LQD, but I haven't done a study with SPX. What does it look like?
Well, I'm just saying it looks like that. We had it lock up, and the Fed didn't have to spend $1, and LQD came all the way back, kind of like this did. So
yeah, they're not buying retail plays particularly, but the bonds within them are getting a little bit of care, right? There's
yeah.
I
have a question from Skip. He said, if there's time, please ask Samantha where she thinks the market would be if the Fed hadn't printed the recent QE.
1800. Absolutely.
Right.
1800 for SPX. Absolutely.
Okay.
Absolutely. So that was actually my my thesis. If we did not get saved, which was actually on 3/20, right before the Fed came in on that Monday, the 23rd, that I thought the markets would close and that we would just open up down at that area.
All right. Yeah. Okay.
But and we might still go there. So this is another chart I'm going to show. It's kind of my closing chart because the market's going to open and I got a trading room I got to open and trades I got to manage. But long story short, this is
back as support.
This is volatility.
Yeah.
And I had been charting this basically down here. You can't even see it anymore because volatility was so exploded. This is the 3-month, by the way. So it's not your VIX, it's actually VXV. But long story short, I had spied this breakdown and then moved inverse head and shoulder, if you kind of go really small, with a trend line break that took everything out, including the won devaluation of 2015, including Volmageddon.
Yeah.
I mean, it was intense, right?
Yeah.
Well, guess where we are? Right
back
where
to the breakout.
we broke out. Danger zone. Having said that,
great look.
I am very long value plays. So I'll see how it does today and tomorrow. But that is my theme moving forward with a very cautionary look on the dollar won and volatility. And with that, I wish you a great afternoon and day.
Great presentation again, Samantha. Thank you for edifying our community today.
Oh, my pleasure, Dale. You take care. God bless.
You too. All right,
Bye.
Samantha LaDuc, you could follow her on Twitter at Samantha LaDuc. She knows what she's doing. She's a fisher woman and not a fisherman, and she'll show you how to fly fish like the guys in A River Runs Through It. Right? That's going to be a wrap for us. Remember, don't just count your pips, count your blessings. There's how you get a hold of Amanda, premium bundle, and her website at LaDuc, www.laductrading.com. That's a wrap. Don't just count your pips, count your blessings, and we'll wrap up the week tomorrow. Thank you again, Samantha.
My
Adios.
pleasure. Bye.
Bye.